We will explain today the phase 2 of the MOL Group's management plan, Blue Action 2035, which aims to transform the group into a global social infrastructure company. And then this is the briefing session. I will be the MC for the day, Investor Relations Department Head Shibe. And the main speaker would be the Chief Executive Officer, Tamura, from the 1st of April 2026, Chief Operating Officer Uemura, and a Chief Financial Officer Hamazaki. In April 2023, we launched our 13-year group management plan, Blue Action 2035, and have expanded our field as a social infrastructure company originating from the ocean. And we positioned the 5 years from 2026 to 2030 as the next stage, phase 2, and we'll continue to take on challenge toward realizing our group vision for 2035. This is the agenda. First, we will provide an overview, including a review of a phase 1 and the positioning of a phase 2, followed by a detailed explanation of the phase 2 plan. So phase 1, so the first part will be from the CEO Tamura-san, and the cash allocation, the shareholder return, and the 3 main strategy will be from the CFO, and the detailed execution plan of each business segment will be from Uemura-san. So the Tamura CEO, please. Well, to everybody who have joined this session, thank you very much for being here. My name is Jotaro Tamura, who has taken up this position of CEO from the 1st of April. Before going into the main position, I would like to make a brief remark on the current situation in the Middle East and the international situation, including around the Strait of Hormuz. It is becoming increasingly unstable, and the structure of supply chains, particularly for energy, is being recognized as a major issue. And as a social infrastructure company rooted in the ocean, and for Japan, which depends heavily on imports for its resources, energy security is an extremely important issue, and we strongly reaffirm that our group plays a vital role in the global energy supply. So it is precisely under these circumstances that we, as the social infrastructure company rooted in the ocean, are more mindful than ever of our responsibilities in our daily operations. So we will continue to prioritize the safety of our seafarers, cargo, and the vessels, and as one group ensures the stable delivery of essential goods that support energy supply and everyday life. And we were committed to working closely with the relevant stakeholders and governments to fully fulfill a role in contributing to the stability of a society as a whole. And Blue Action 2035, which we will present today, is our group's management plan to sustainably enhance corporate value by achieving both economic and social value, even in an era of high uncertainty. With that, I will now move on to the explanation of the details. First of all, this slide. Under Blue Action 2035, we manage targets and performance for each phase using a core KPIs and continuously monitor progress toward achieving our goals for fiscal year 2035. In phase 1, we largely achieved both financial and non-financial core KPIs and significantly advanced our transformation toward management that balances growth and stability. And in addition, during the 3 years of phase 1, supported by favorable market conditions, we achieved the profit targets set for the final year of the period for 3 consecutive years, starting from the first year. If we go to the next page, slide 5. In addition, in phase one, we positioned asset rebalancing as a key theme. We classified our businesses into market-driven and stable earnings types based on their exposure to market conditions and advanced the transformation of our asset composition, taking into account the high market volatility inherent in the shipping industry. We aimed to increase the proportion of stable earnings business in order to achieve an optimal balance that delivers high returns in a strong market while maintaining profitability for the group as a whole, even during downturns. And in the initial plan of phase one plan, we had set an investment plan of 1.2 trillion yen. However, by proactively capturing opportunities, we executed investments totaling 2.0 trillion yen, including 1.6 trillion yen in stable earnings of businesses. As a result, we advanced rebalancing to 37-63, nearly achieving the planned in a 40-60 ratio, while also bringing forward the expansion of total assets, thereby advancing both the transformation and growth simultaneously. And page 6. Meanwhile, as we executed the phase one plan, there were changes in the external environment that differed from what we had anticipated 3 years ago. As I said at the beginning, geopolitical risks, including the current instability around the Strait of Hormuz, as well as concerns over economic and energy security, are causing instability in the global environment and increasing uncertainty. In addition, delays in the energy transition and the rapid advancement of AI could also impact our growth strategy. And if you go to the next page. Well, still on this page. Under these circumstances, in phase one, we advanced investments aimed at securing stable future earnings through portfolio transformation, enhanced the sales capabilities of our overseas organizations, and created growth opportunities through regional strategies, and accumulated achievements and expertise toward decarbonization through our environmental strategy. In the next stage of phase two, we will accelerate the realization of returns on investments, adjust the pace of investments that had been executed ahead of schedule, and strengthen shareholder returns. While uncertainty is increasing due to changes and instability in the external environment, we will view changes in the business environment, such as supply chain restructuring and energy transitions, as new opportunities and continue to meet societal needs. In phase two, we will shift the focus of management from transformation and expansion to delivering results. Accordingly, we have identified 3 key priorities for phase two aimed at delivering results, as shown on the next slide. Slide 7. The first of the key priorities is enhancing our earning power, which you see on the left-hand side. We will strengthen the profitability of the entire group by leveraging and enhancing the strength of each individual business. So specifically, we will focus on realizing the full effects of our investments, creating synergies across businesses and regions, and undertaking a disciplined risk-taking and business exposed to market conditions. The second is a balanced capital allocation. We will pursue growth investments, financial soundness, and shareholder returns simultaneously, thereby improving capital efficiency. Specifically, we will work on balancing investments with the maintenance of a sound financial base, strengthening shareholder returns, and prompting asset recycling. The third is building a solid management foundation. Through addressing sustainability issues and enhancing governance, we will strengthen the foundation for sustainable business growth. In particular, we will focus on maximizing the capabilities of our people and organization, and then driving business transformation through digitalization and the adoption of AI. So by setting these 3 priorities for phase 2, we will translate the achievements and strengthen accumulated in phase 1 into tangible results in the next stage, aiming to further enhance corporate value. If we go to slide 8. From here, I will explain the details of the phase 2 plan, covering the overall framework of a Blue Action 2035, the profit plan, shareholder return policy, and cash allocation, the 3 main strategies, and the main management foundation. Page 9. This is the overview. We position Blue Action 2035 as a roadmap to create economic and social value in an integrated manner and to move toward realizing our group vision. In phase 2, we have incorporated sustainability issues together with governance into our management plan as part of our management foundation. Through the 3 main strategies and the strengthening of our management foundation, we aim to create both economic and social value and become a company chosen by all stakeholders. So this is the updated overview of a Blue Action 2035. The overall structure remains unchanged from the original plan formulated 3 years ago. The key update this time is the phase 2 priorities, shown near the center of the diagram, the 3 things. In phase 1, portfolio transformation centered on an asset rebalancing was positioned as a key theme. However, as mentioned earlier, phase 2 focuses on priorities aimed at delivering results. Under the phase 2 priorities, we will advance initiatives related to our management foundation, comprising 3 main strategies: portfolio, regional, and environmental strategies, as well as 4 sustainability issues and governance, aiming to realize our vision for 2035. Slide 11. Again, core KPIs. The core KPIs that quantify our desired state for 2035 consist of financial and non-financial KPIs. As in phase 1, the financial KPIs are pre-tax profit, net gearing ratio, and ROE, while the non-financial KPIs cover environment, safety, and human capital, and the digital transformation, DX. For pre-tax profit based on an investment made in phase 1 and plans beyond phase 2, we have raised the 2030 target from 340 billion yen to 420 billion yen, and the 2035 target from 400 billion yen to 500 billion yen, aligning with our asset size and portfolio. And from phase 2 onward, we will place a greater emphasis on improving capital efficiency, setting our ROE target at over 10%. Among non-financial KPIs, we have also reviewed the human capital indicators. Slide 12. This slide shows the breakdown and a pathway for business toward achieving a pre-tax and a profit of 420 billion yen and ROA of 5.5% in the fiscal year 2030, the final year of the phase 2. From a fiscal year 2026, we will establish a new chemical logistics business consisting of chemical tankers, methanol carriers, product tankers, and tank terminals, while reorganizing crude oil tankers, LPG, ammonia carriers, LNG, ethane carriers, and wind offshore into the energy business. This profit plan is based on the assumption that instability around the Strait of Hormuz will settle by the end of April. However, we will monitor developments and update it as necessary at the time of our earnings announcement. And we will also provide details on a pre-tax and a profit before tax and for container shipping business in a fiscal year 2026 at the end of April. Slide 13. To achieve the phase 2 priorities of an enhancing earning power and a balanced capital allocation, we will revise our business management approach. Specifically, we will shift from the previous 2 categories, market-driven and stable earnings, to 3 categories, market-driven, mainly container shipping, and hybrid, primarily other shipping businesses, and the stable earnings, including LNG carriers and non-shipping businesses. Further details will be explained in later slides. The purpose is not the classification itself, but rather to institutionalize risk-return control as a framework to improve overall ROA. Based on this new classification, we will work to expand the scale and improve portability while maintaining current and asset and profit ratios. And so again, that we will work to expand the scale and improve portability while maintaining a current asset and a profit ratios. In particular, we plan to increase profit before tax in non-container shipping business from 204 billion yen in 2025 to 260 billion yen by 2030. And slide 14, please. In phase 2, which is positioned as a phase of delivering results, cash generation capability is also an important indicator. We have defined base operating cash flow as an indicator of fundamental cash generation capability and present its trajectory. We will realize the results of investments made in phase 1 and steadily expand base operating cash flow, particularly in hybrid and unstable earnings businesses, transforming into a structure less dependent on market-driven businesses. Excluding one-off items such as special dividends from ONE, we plan to increase base operating cash flow by approximately 110 billion yen from a fiscal year 2026 to fiscal year 2030. So compared to 25, 120 billion yen more. So long contract equipped, the new vessels will come into operation is one reason, and a tank terminal business expansion is another, and overseas real estate business contribution, and a cruise business and expansion. So these initiatives planned for phase 2 will materialize in numbers are those reasons. From page 15, the CFO will explain the details. Right, so this is Hamazaki, the CFO, and thank you for being here with us. Regarding the shareholder returns in phase 2, we will introduce a progressive dividend starting at 205 yen per share and implement a flexible share buybacks targeting a total payout ratio of 40%. 2026. So we actually had this assumption of the earnings going to be less than 2025, but 200 yen is the how we'd like to get started with a phase 2. So hence, that we have set the progressive dividend is starting at 205 yen. But this was a 5 yen, and Dividends will be determined based on a level that can be stably sustained in line with the accumulation of stable earnings businesses. Targeting a total payout ratio of 40%, we will flexibly conduct share buybacks for the difference between dividends and total returns, thereby returning upside from market-driven and hybrid businesses to shareholders. And shareholder buyback is not just the means to return to the shareholders, and progressive dividends will enhance the dividend visibility, while share buybacks will improve capital efficiency. And we will be able to achieve it both with confidence as how we are seeing it right now. So this shows the cash allocation assumed for phase 2. Although fluctuations may occur year by year, and a policy that emphasizes financial soundness, we will accumulate based operating cash flow and then further promote asset replacement, shifting away from a phase 1's investment first approach and not relying on a new external funding. At the same time, when attractive investment opportunities arise, we will make growth investments using external funding selectively. So 700 billion yen was the annual average of investment, and a follow-on investment and the shipment. So 830 billion yen is here, and that 300 billion yen is the annual increase in the phase 2. Phase 1 follow-on investment will be cash out mainly in 26 and 27. And as these vessels come in a business, the base cash flow will increase. And by strongly focusing on improving ROA and advancing business and asset replacement, we will ensure the sustainability of both growth investments and shareholder returns. So from here, I will explain the 3 main strategies in more details. We have reorganized the fundamental approach to our portfolio strategy. These are strengthening a competitive advantage, 2, balancing earnings stability with the market upside, and 3, creating horizontal and vertical expansion and synergies centered on strong businesses. To achieve this, in phase 2, we will further strengthen investment selection, enhance business monitoring, and promote business and asset recycling. This slide explains the 3 business categories. Market-driven businesses generate high profits in favorable markets, but also experience significant volatility. Stable earnings businesses expand steadily with reduced volatility through long-term contracts and fixed income. Hybrid business sit in between the two, possessing some resilience through high entry barriers and medium to long-term contracts, while strategically managing market exposure to capture upside during favorable conditions. While phase 1 focused on strengthening stable earnings of businesses and rebalancing the portfolio, phase 2 will additionally enhance strategic risk-taking and upside capture in hybrid businesses. By combining these, we achieve diversification across different market cycles, preventing a downside risk while generating a significant profits during favorable conditions. Slide 19. We will also pursue horizontal and vertical expansion and synergy creation centered on our stronger businesses, aiming to build a unique portfolio unmatched by competitors. In particular, the trust and the capabilities we have built in maritime transport are key, and a close collaboration between our regional organizations and headquarters is essential for execution. Here we present a diagram centered on the LNG value chain and chemical logistics as a concrete example. So leveraging the strength of each business in a regionally rooted networks and group-wide connections we have built, we aim to participate in the value chains for decarbonized energy, a new growth area. And next is slide 20. The second of the three main strategies is regional strategy. In our regional strategy, which predates Blue Action 2035, we aim to capture regional growth worldwide as our own growth. In phase 2, based on our track record, expertise, and regional characteristics, we will focus on key businesses areas where our strength can be leveraged. Specifically in Europe and in North America, we will pursue business development in decarbonized energy and a vertical expansion from a maritime transport into upstream and downstream areas supported by advanced environmental technologies, numerous partners, and active innovation. In regions such as Asia, Africa, and Latin America, where population growth and high economic growth are expected, we will expand shipping operations and invest in infrastructure-driven opportunities. Personnel from overseas organizations, including a group of companies strengthened in phase 1, will take the lead in advancing regional strategies in close coordination with the headquarters. Slide 21. In particular, we regard the Indian Ocean region as our top priority area, given its strong medium to long-term growth potential. While we will not go into specific project details today, we have already built a pipeline of projects across various business areas in the Indian Ocean region, spanning from East Africa to South Asia and Southeast Asia. We will continue developing these businesses, aiming for further expansion and early profit contributions from phase 2 onward. Slide 22. The final of the three main strategy is environmental strategy. We view decarbonization not merely as a regulatory compliance, but as an opportunity for service differentiation and growth. By adopting low and zero carbon fuels and improving fuel efficiency, we will differentiate our transport services and establish a competitive advance. At the same time, we will leverage our broad business platform to capture decarbonization as a new business opportunities. These three portfolio strategy, regional strategy, and environmental strategy constitute the core strategies set forth in the Blue Action 2035. And slide 23 next. Back to Tamura-san. And next, I will explain the management foundation, which, like the three main strategies, is positioned at the core of the Blue Action 2035. We have reorganized our stability issues to focus on those that contribute more significantly to value creation, identifying 4 key areas: environment, safety, human capital, and the digital transformation, DX, as our material sustainability issues. Within these 4 themes, we have also identified the specific priority areas to focus on. We have established 4 theme-specific visions linked to these sustainability issues, within which we manage KPIs and actions. Slide 24. From here, I will outline the theme-specific visions associated with the 4 sustainability issues. The first is environment. As explained in the environmental strategy slide, we will continue our current initiatives categorized into reducing our own GHG emissions, greenhouse gas, and contributing to society's emission reductions, steadily progressing toward net zero by 2050. Through the introduction of alternative fuels and improvements in fuel efficiency, we will significantly reduce our own GHG emissions and expand low and zero carbon businesses, achieving both our group growth and societal decarbonization. Slide 25. Next is safety. Safety is an absolute prerequisite for business continuity and the highest priority for our group. Through safe operations, we will continue to protect the people, assets, and the environment, contributing value to society and our stakeholders. To achieve this, we will strengthen our safety foundation, including awareness and organizational systems, and further promote initiatives such as empowering our people, leveraging technology, and enhancing risk management. Slide 26. The third is human capital. We will leverage the diverse talent across our group, including new members from phase 1 and then global personnel, to maximize the capabilities of our people and organization in alignment with our business strategies. Under the human capital vision linked to this sustainability issue, we focus on the 3 key themes: diversity, co-creation, and a meaningful work, and will continue initiatives aligned with these areas. Slide 27. The digital transformation vision linked to the 4th sustainability issue aims to enhance profitability while contributing to both solving societal challenges and achieving corporate growth. Specifically, we will advance initiatives in 3 key areas: AI-driven transformation, maritime digitalization, and a global co-creation infrastructure, maximizing the use of AI not only for operational efficiency, but also in management and business operations. We will also make onboard operations visible and connected, enhancing operational efficiency and stability, thereby strengthening our competitive advantage. In addition, we will develop information infrastructure that enables unified data and systems globally, facilitating a faster decision-making across regions and businesses. Slide 28, please. Finally, governance, which together with the sustainability forms our management foundation. As we expanded our business scale in phase 1, we have developed governance structures suited to our group. We will further evolve our board of directors into a strategy-focused and a supervisory body to strengthen corporate governance. In addition to continuing phase 1 initiatives, we will strengthen our execution structure to drive growth even amid increasing external uncertainty. The following are supplemental materials. As time is limited today, I will focus on key points, particularly the winning strategies of selected businesses, and Umezaki-san will explain this. Right, Chief Operating Officer, Umemura, apologies for the name mistake, Umemura. So first is the dry bulk business. Towards 2030, we aim to further strengthen our sales capabilities, both domestically and internationally, enhance service quality, and improve both market resilience and upside capture capability. Within the dry bulk segment, we will introduce our strategy and a winning approach for the small and medium-sized bulker businesses. In this segment, we will capture new transport demand arising from a population growth and energy transition, seizing global growth opportunities. To achieve this, we have expanded our overseas presence by combining our strong presence in Asia with a global network of G2 Ocean, jointly operated with the Gearbulk. By integrating capabilities to handle over 160 types of cargo across MOL, dry bulk, and Gearbulk, we differentiate through high value-added maritime transport while leveraging cost competitiveness through integrated group operations. So this is our group's winning strategy for the small and medium-sized bulker business. Slide 31. Next is the energy business. Toward 2030, we aim to capture the energy transition and achieve sustainable growth by enhancing the profitability of existing businesses and expanding low and zero carbon businesses. Within this segment, we will introduce our strategy and a winning approach for the LNG value chain, which we are strong. In the LNG value chain, we are growing our business by leveraging stronger market growth, our leading global market share, industry presence, and a competitive fleet structure. We are expanding ethane and LPG fleets through horizontal deployment of our global network and JV models, joint venture models, building stable earnings via FSRU projects through vertical integration and entering new floating facilities such as LNG power vessels and FLNG. We will enhance integrated marketing and engineering initiatives like Wind Challenger, strengthen cost competitiveness, and further expand vertically within the LNG value chain. Through these efforts, we will establish a winning position across the entire value chain. Slide 32, please. Next is the chemical logistics business, which is newly set. Toward 2030, we aim to enhance our group's competitiveness by organically integrating a maritime transport and onshore storage and to become a leading company in chemical logistics. Within this segment, we will introduce our strategy and winning approach for the tank terminal business. In the tank terminal business, collaboration between MOL Chemical Tankers and LBC, which joined the group in phase 1, is key. In addition to improving efficiency through joint sales and operations, we will collaborate with the upstream development and maritime transport to pursue business development in next generation energy and a decarbonization of related storage. In addition to the existing chemical business built by MOL Chemical Tankers and LBC, we will capture opportunities from the energy transition by expanding into high-growth Asian markets, broadening handled products, and improving profitability through operational process enhancements. This is our winning strategy for the tank terminal business. Slide 33. Next is the product transport business. Toward 2030, we aim to grow our business globally by meeting logistics demand in growth regions centered on our competitive container and car carrier businesses. With this segment, we will introduce our strategy and a winning approach for the car carrier business. In this business, we combine stable, longer-term demand for maritime transport with our strength. One of the world's largest fleets, a service network spanning 5 regions and 29 locations, and then differentiated end-to-end solutions, including eco-friendly fleets and finished vehicle logistics to build a hybrid earnings model. We will provide stable transport based on long-term contracts with the key customers, clearly differentiate through low-carbon transport and deepen customer solutions through integrated services. This is our group's winning strategy for the car carrier business. Slide 34. Finally, the well-being life business. Toward 2030, real estate aims to improve capital efficiency, ferries aim to capture modal shift opportunities, and cruises aim to enhance brand value, all contributing to increasing group corporate value. Today, we will introduce our strategy and a winning approach for the real estate business. Our real estate business is led by Daibiru, focusing primarily on office buildings, both domestically and internationally. In phase 1, we actively invested not only in domestic but also overseas projects, aiming to diversify and improve profitability. In phase 2, we will promote greater liquidity in real estate through initiatives such as entering the asset management business and implement measures to further improve capital efficiency and ROA. As part of our capital efficiency enhancement measures, including asset replacement and the generation of capital gains, we plan asset recycling totaling approximately 230 billion yen over 5 years. We believe that by maintaining a real estate business that operates under a market cycle different from a shipping, the MOL Group can strengthen overall management stability and more proactively capture business opportunities in shipping. In addition to transforming the business model of the real estate business itself and enhancing property value, we will strengthen integrated group-wide sales activities, define a clear winning strategy for our real estate business as the MOL Group, and execute it. Right, so the very last part again from myself, Tamura. Slide 35. This is a supplementary slide showing the relationship between the phase 2 actions focused on strengthening earnings power and reducing capital costs and a corporate value enhancement. So we're strongly mindful that all initiatives in phase 2 will create both economic and social value and lead to enhanced corporate value. And we will continue our efforts towards realizing our group vision for fiscal year 2035. So I will explain our value as a social infrastructure company finally. As seen in the changing external environment, global stability is being affected by factors such as the situation in the Middle East, and the everyday life, not just in Japan, but around the world, is heavily affected. As a social infrastructure company, our group is committed to the mission of realizing a sustainable ocean and a global environment, enhancing well-being and providing infrastructure that supports people's lives and industries. In any era, our group will continue to respond flexibly to changes in the external environment and fulfill our mission of providing infrastructure that supports people's lives and industries. Our corporate philosophy, from the blue oceans, we sustain people's everyday lives and open the way to a prosperous future, embodies our commitment and a determination to this mission. Through contributing to society via our business activities, we will build greater trust with our stakeholders and strive to remain a company that is chosen now and into the future. This concludes the explanation of the MOL Group's management plan, Blue Action 2035 at phase 2. Thank you very much for listening.
To the future with our ocean planet, Mitsui OSK Lines.